Hey everyone, welcome back to the Chain Reaction Podcast. I'm your host, Tom Shaughnessy, a co-founder at Delphi Digital, where we're 5 full-time analysts focused on institutional crypto research. If you aren't a subscriber, you're missing out, so visit the site while you're listening. One quick housekeeping item. This podcast is strictly informational and educational and is not investment advice or solicitation to buy or sell any tokens or securities or to make any financial decisions. I may personally own tokens that are mentioned on the podcast, and you can view the show notes for our full disclosures. With that out of the way, today I'm thrilled to have on Ryan Sean Adams and Hasu for the most logical and professional conversation discussing the similarities and the differences between Bitcoin and Ethereum. This was an awesome one. I learned a ton and we had a blast. It's longer, so I want to hop in as soon as we can, so let's dive right in. Hey everyone, welcome back to the podcast. Today I'm thrilled to have on a special episode with Hasu as the Bitcoin bull and Ryan as the Ethereum bull. And what we're going to do today is discuss the similarities between Bitcoin and Ethereum. We're also going to go into the differences. And this podcast is hopefully going to serve to be the go-to resource between the two because we all feel that arguments on Twitter devolve and are basically screaming matches past each other. So with that, Hasu, tell us a little bit about yourself and give us your quick background.
Hey, thanks for having me. I research cryptocurrency and mostly Bitcoin just for fun. And because I'm really, really fascinated with the topic, and my goal would be to just advance the state of knowledge. I think just Bitcoin is such a fascinating research topic, and of course the same goes for Ethereum. But at the same time, I mean, Bitcoin has over $100 billion in value right now, and yet there's so many unanswered research questions that it's just I think it's a great field to be in for the next couple of years.
Brief introduction.
Yeah, hey guys. So glad to be here representing, I guess, the Ethereum bull side of things. Want to start by saying, obviously, I started this, as many others, as a Bitcoin bull too, and I remain that today. I guess I'm sort of taking the Ethereum side in this conversation because I do think ETH, the asset, and Ethereum, the network, is underappreciated relative to Bitcoin, though they have a ton in common, which I hope we have an opportunity to explore. So my day-to-day is managing a capital pool that invests in crypto assets and also a staking company. One of my core focuses is trying to uncover and determine which of these crypto assets will maintain and accrue a monetary premium over the long run. Certainly Bitcoin is one of those. I believe ETH is one of those as well. And I agree with Hasu that whatever happens in this field, the crypto space is tremendously interesting. We're really in the first inning. If I'm lucky, I hope and expect to spend the next couple of decades just kind of exploring this field.
It's an excellent intro. So I guess we should begin with what the vision for Bitcoin is. Hasu, I guess you'll be most suited for this. What's the vision for Bitcoin?
Well, there are probably 10 different people give you 10 different answers. But for me, the vision for Bitcoin is to become a parallel decentralized financial system that's permissionless to use, that's censorship resistant. And I think there's a lot of other use cases and visions that can be derived from that. And at the core of the financial system would be a scarce digital asset.
Got it. And Ryan, what's the quick vision for Ethereum?
Yeah, one way to think of Ethereum is that it's Bitcoin but programmable. I think Ethereum as well shares a similar vision to Bitcoin in that it wants to create an open, global, permissionless, decentralized financial system for the world. But the thing that Ethereum added to the Bitcoin vision was this idea of programmability, this idea of hosting programmable banks and programmable money applications on top of the base platform itself. And from my perspective, that gives Ethereum some advantages in that it can actually have not only a decentralized sound money asset layer, as Bitcoin does, but also a decentralized banking layer. Rather than depend on a BitMEX for crypto bank for banking and derivatives, you can think about protocols, decentralized protocols like DYDX. Rather than a Binance, you have decentralized exchanges like Uniswap. So to me, it's really an extension of the Bitcoin vision. I think these projects both make some trade-offs that we can explore. I expect them both to be around for the future. But if I had to sum it up, I would say the vision for Ethereum is essentially that programmable money, and like you could think of it as Bitcoin, but programmable.
So we have the intros for Bitcoin and Ethereum. Let's dive into, since Bitcoin came first, Ethereum came second. The question is, did Bitcoin's focus on security open the door for something more programmable like Ethereum? And I guess either of you could jump on this question if you'd like.
Well, I mean, the answer is obviously yes, without even judging whether it makes sense to do what Ethereum tries to do, or the long tail of all the other crypto assets out there. But Bitcoin's focus on security and the very long-term thinking in the development of the system. I mean, of course, it leaves the door open for people who like things to move faster and who have a different vision for the future. If you think back a few years, there was this huge movement, basically, of blockchain, not Bitcoin. So a lot of people seeing non-monetary use cases for blockchain to be the better choice. And Ethereum, in my opinion, it really benefited, or it wrote that narrative. If we think back at the early marketing material, at the yellow paper, I think a lot of the use cases that were originally suggested for Ethereum were non-monetary in nature.
Got it. Ryan, what's your take on this?
Yeah, I might disagree slightly with some of those points. So I think if you go and you reread the original Ethereum white paper, you find like a ton of programmable money use cases. I mean, there's talk of tokens and fundraisers right from the very beginning. Those are programmable value types of applications. There's talk of prediction markets. I think actually the Ethereum community has always somewhat rejected the blockchain, not Bitcoin movement as well. The blockchain, not Bitcoin movement was mostly about private consortium blockchain networks and not so much about public networks. So, and Ethereum, of course, has always emphasized public networks. Now, there's always been a notion in the Ethereum community, groups like Consensus, that private blockchains would sort of connect to public mainnets like Ethereum in the way a local area network might connect to the internet. But I think programmable value, monetary use cases have been part of the vision from the very beginning. People get stuck on this sort of marketing narrative around a world computer, and I think that sort of trips people up. The reason Ethereum has talked about a world computer is just because it's a blockchain with state. That's all that means. It's sort of an engineering term. Unlike the Bitcoin, which doesn't have state, sort of tracks back using UTXO transactions. Ethereum it's a global singleton. It has global state and the ability to track assets and remember things. And I think that when people think of a world computer, sometimes they get tripped up. They think that Ethereum was about creating some sort of global AWS. And it never was that. It's always been about the programmable money use cases. but open to other alternatives in Web3 protocols as they emerge too. And so, I would say don't get tripped up by the world computer narrative. If that doesn't work for you, throw it out.
Yeah. I mean, I threw it out almost immediately.
Yeah. Yeah. I mean, and you don't see world computer or Web3 in the Ethereum white paper either. If you look through, the vast majority of applications, use cases mentioned are actually programmable value types of use cases.
It's interesting. So let's dive into the similarities before we get into differences, because I feel like a lot of people don't focus on this area. Let's talk about what you guys agree on. So let's start with the self-sovereign individual. Do you guys agree on this aspect for Bitcoin and Ethereum?
Absolutely. Yeah.
Yeah, I would agree. I mean, I think, data ownership, owning individuals having ownership and control over their money, separating money from central banks, being your own bank. These are also central to the Ethereum vision as well.
That's awesome. And we have a laundry list, so we'll go through them. But the next one up is censorship resistant money. So no AML, no KYC. Hasu, do you believe that this applies to both Bitcoin and Ethereum?
Oh yeah, I mean, for all the points that we wrote down, I pretty much agree with them.
Gotcha. Ryan, how about you? Same here?
Yeah, and I was listening to a podcast recently. I think it was Matt Odell talking about how other blockchains besides Bitcoin would be more susceptible to AML, CYK. And I disagree. I think that Ethereum sort of rejects that at the base level, and it will prove censorship resistant to state level actors who might try to implement that. It's really important to Ethereum and the value system that those sorts of things, the ability for governments and powers to censor can't exist at the base layer.
That's excellent. And I guess next up on similarities is decentralization. So there's obviously a ton of ways to measure this. So nodes, miners, who has access to the code. Hasu, do you believe that Bitcoin and Ethereum are both, I guess, sufficiently decentralized, or do you think one's more or less than the other? Or what's your take here?
I mean, it's very hard to say if either of those are sufficiently decentralized, because arguably both of them are right now overspending on their security. I mean, the lack of attacks is, in my opinion, a strong indicator on that. I generally see three trends that they may reveal this over the next decade. The first is the rising price, which brings more attention of actual state actors. The second is the decreasing block rewards. Oh, and I forgot my third one. Sorry, but I mean, my point is that both are basically the heat is rising for both of them, and it's definitely important to focus heavily on retaining decentralization or increasing decentralization further. So, because I'm not sure that either of them would survive basically like a crackdown of the US government, for example, right now.
It's a good call. Ryan, what's your take on decentralization on Ethereum today?
Yeah, I mean, I agree with Hasu that I'm skeptical that either would survive a government crackdown. I mean, it hasn't been attempted yet, so hopefully we have some time to figure it out. But I would absolutely say that the Ethereum community prioritizes decentralization every bit as much as the Bitcoin community. And I think there's certainly some mutual respect for both projects along that axis. I think Ethereum could have implemented schemes, for example, like proof of stake far earlier. If it didn't care, it could have implemented an EOS style delegated proof of stake scheme, for instance. There are a lot of scalability decisions that could have been made that weren't, simply because with those solutions there's been a trade-off between decentralization and scalability. So Ethereum is very methodically prioritizing decentralization in its roadmap. And I think will be every bit as decentralized as Bitcoin in the future, and is close to it now. I might give Bitcoin some marks in areas such as it has a lower Gini coefficient. For example, it's been around longer. I think that I might give Ethereum some marks on the other side. For example, it already in ETH 1.0 it has multiple clients, whereas Bitcoin only has Blockstream kind of dominates from a client perspective. So each certainly have pros and cons on the decentralization side of things, but both projects are prioritize it as a core component of their value system.
I would maybe interject there for a second, because to my knowledge, very few maintainers of Bitcoin Core work for Blockstream. So I think that narrative that Blockstream controls Bitcoin Core, I think it's a bit worn out. In general, I think I actually had that written down here as a point of similarity, that Ethereum, in my opinion, is becoming more decentralized, which I really like. So maybe for clarity, I should say that I was short Ethereum in 2018, and I closed my short. And eventually this year, I bought Ethereum, and now I'm long Ethereum as well, because there were many developments that I liked, and in a sense that made me think, okay, Ethereum is becoming more like Bitcoin in the ways that are important to me. For example, I saw a lot more, well, some people would say toxicity, but to me it's basically different interest groups that basically prevent easy decisions in one direction or the other. That was something that I think Ethereum proponents, but also like people from other blockchains that were like heavily criticizing about Bitcoin over the past years. The Bitcoin is very slow moving because it's very hard to get agreement about what to change, and if not everyone agrees, then we don't do it. And I like that Ethereum is moving in that direction, for example.
That's helpful. And if I were to push back to both of you guys, Hasu and Ryan, I mean, on Bitcoin, one of the areas of centralization could be access to the code base. But on Ethereum, one specific centralization vector could be leadership. How do you guys point back or push back to those two like caveats to decentralization?
Can you define access to the code base?
Yeah, so right access to the GitHub.
Oh, I mean, anyone can follow basically the Bitcoin improvement proposal process. They can make a proposal and then basically have it reviewed. And if there's overall, like if it's a very small change, you don't need community consensus, that. But for other stuff, I think that the process is generally quite well established, and the group of contributors is very diverse. And if I'm not mistaken, I think over 60 people have made their first commit to Bitcoin Core in 2018, which is, so I think we are very diverse in that regard.
Yeah, that's helpful. Ryan, what about your take on like leadership? Like it's always talked about like Vitalik, Danny Ryan, Justin Drake, but at the end of the day, even if somebody were to put a gun to their head and make a change, the community could just not accept it, right?
Yeah, absolutely. And I think it's important to point out that both Bitcoin and Ethereum have the same fundamental governance system, which is sort of a metacratic, open source ethos around acceptance of changes. And I think we've seen the same sort of governance process happen in Bitcoin as has happened in Ethereum, where if something is against the social contract of Bitcoin or of Ethereum, it's almost impossible to get through. And the reason for this is even if the developers put it in a specific client and put it in the code, nodes still have to run it, miners still have to run it, validators still have to run it, and they can at any time essentially rebel and fork and leave the system. So EIPs or BIPs that are against social consensus just simply don't get through. And I do find, like, I know you're not saying this, Tom, but I find some of the like vitriol, Vitalik kind of runs things and is centralized leadership to be kind of disingenuous, because a more valid criticism I would think about Ethereum is that it's not centralized enough in its development. And that seems to be, you can't kind of have it both ways, right? It's so decentralized that even development of ETH 2.0 with the 7 or 8 client teams, it takes a long time because there's not a centralized client coordinator. This is a development process that is kind of the antithesis of Libra, for instance, which is completely centralized. So yeah, that really doesn't ring true to me, that Ethereum's leadership is too centralized. The governance process is the same as Bitcoin. And I think we're seeing how decentralized it is, even in the development of ETH 2.0.
That's a great segue into the similarity of both Bitcoin and Ethereum don't have on-chain governance. And Ryan, to your point, on Ethereum, there's discussions everywhere from Reddit and Twitter all the way up to ETH Magicians and ETH Research. Bitcoin obviously has all of its forms, and I agree with Hasu that the blockstream controls Bitcoin narrative is somewhat overblown and old at this point. So both Bitcoin and Ethereum don't have on-chain governance. Do you guys agree that this is a good similarity? Do you think that Ethereum may have on-chain governance in the future? Because I don't think Bitcoin ever will. What's your takes here?
So maybe Ryan, can you tell me a bit, like, I'm not quite sure how governance was treated in Ethereum early on, because correct me if I'm wrong, but it the way I remember it, like the lack of Bitcoin's on-chain governance was always criticized. It was always criticized pretty much because it makes it hard to measure consensus, quote unquote, like for new changes. So like I definitely like the focus Ethereum puts on off-chain governance now, but maybe you can tell me a bit about that.
Yeah, I really think the governance process is very similar to Bitcoin's. Originally, of course, Satoshi was the only one making decisions on Bitcoin. Of course, before the white paper was released and code was released, I think that was similar to the genesis of Ethereum, in that it started centralized with the Ethereum Foundation, but has since kind of become more and more decentralized over time. I don't think that Ethereum will go in the direction of on-chain governance. And by on-chain governance, I mean, I think we're talking about a system like Tezos, for instance, that protocol upgrades are susceptible to, or not susceptible, are essentially approved through on-chain voting processes, where all of the coin holders get together and vote on various proposals. I don't see Ethereum going in that direction at all. I think it will remain a open source Metacratic governed system in the same way Bitcoin is, and really I think the governance is somewhat backed by social consensus in both of these systems. I think making changes hard can be a good thing, particularly for systems that are trying to accrue a monetary premium and become money. So I think that's certainly one thing that Bitcoin got right, and I think Ethereum is getting right too in rejecting on-chain governance to this point.
Yeah, and Ryan, that's a good point to bring up. And as somebody I've covered Tezos, I've looked into Polkadot and others, and Decred as well. And what I do like about on-chain governance is basically solving the coordination issues between users. But I also don't like the bribing and plutocracy issues, which I don't know if we can get around. Do you guys agree that those issues for other platforms outside of Bitcoin, Ethereum will basically, maybe bring down those other platforms?
Well, if it will bring them down, I'm not sure. But in general, I think on-chain governance is, well, it's largely just smoke and mirrors, because it's not like you can decide. It's not like you can make any big decisions with on-chain governance, because at the end of the day, people can always leave and sell their coins or fork the protocol. And I mean, these are the things that you will see when big decisions are on the line. So, I mean, you introduce a big centralization factor and a way for basically governance of the system to be captured in return for very little, in my opinion, because on-chain governance is really only useful for small decisions where no party has enough of an incentive to just leave.
Let's go into the differences now that we have a lot of the similarities underway. And we can go back to a few similarities we missed, but I want to make sure we have enough time. Let's go into, I guess, one of the main differences between Bitcoin and Ethereum, which is programmability on the base layer. Bitcoin is hard to program on. I think that's a fact at this point. Ethereum's easier, but Bitcoin obviously favors security there. What are your guys' take on no programmability at the base layer versus programmability?
You want to go first?
Yeah, sure. So I think that both are interesting trade-offs, let me say. I think that, saying that having programmability at the base layer negatively impacts security might not quite be true. I mean, the hacks that we've seen on Ethereum have been at the smart contract level themselves. You can think of that as almost similar to the hacks that Bitcoin has had on the exchange level, on the custodian level. There hasn't as yet been a protocol hack on Ethereum. In the same way, there hasn't been a protocol hack on Bitcoin. So I'm not actually sure that a security trade-off exists. But I do think there are some benefits in terms of having programmability on the base. And I would say one of the major benefits is that if you are trying to become a decentralized, permissionless, open financial system for the world, you not only need a sound-based money as kind of the foundation of the protocol, but you also need a banking layer. And those banks can either be centralized, like a Binance or a Coinbase, or they could be protocolized. They could be decentralized, kind of open finance protocols, like a Maker, for example, or like a Uniswap. And to me, that second vision is far more compelling, because we could have not only a protocol-driven money layer, but a protocol-driven banking layer. To me, that is the full vision of open finance, and it's something that Bitcoin can't quite get to. The vision for Bitcoin, as I sort of understand it, is a sound money with kind of scaling with crypto banks on top, centralized crypto banks on top, and that's kind of what we're seeing in the marketplace. And to me, that's almost like a gold 2.0. That's not quite as interesting and compelling as the vision of a programmable money and a programmable open financial system.
I hear the narrative a lot that Bitcoin is gold 2.0, and that's not very interesting. But I mean, gold is largely demonetized today, so I think you're underplaying the opportunity there a bit. I mean, if Bitcoin becomes a better gold, then there's no reason that Bitcoin shouldn't be worth like 100 times what gold is worth today. It's not impossible. But in general, I agree. I agree that programmability on the base layer definitely has different trade-offs. And in my opinion, Bitcoin could be a bit more permissive. I think there's probably general consensus about that, both among the people that I talk to, at least who actually develop on Bitcoin. For example, right now it's taking a while to get the necessary opcodes for new features in the Lightning Network and so on. But I also like the focus on basically making it very hard for users to mess up and lose funds. While it's true that that basically the Ethereum protocol itself has not been hacked, same as Bitcoin, there have been more cases where users have lost funds because of their own mistakes. But I mean, at the end of the day, it's just extremely hard to audit Solidity code. I mean, it's just super, super hard. I mean, for Maker recently, you had 3 audits from the top auditing firms for the Maker protocol, and yet Coinbase found a crucial protocol bug. And it's maybe not a big deal at this point because, I mean, these protocols are all centralized anyway right now. So it's not that hard to fix. But I mean, if they actually were decentralized, then I mean, I'm not so sure that the trade-off is worth it.
Yeah, and guys, I'll push back both here on it. I mean, on crypto Twitter and with all the yelling, it seems like most people believe that you can only have one or the other. Hasu, do you think that, let's say Bitcoin overtakes gold and becomes the real digital gold and is a sound money, do you believe that that could coexist with Ethereum supporting an open finance stack that potentially also has billions of dollars on it as well? Or are you of the opinion that we can only have one or the other?
Oh, no. I mean, in general, I think that money has a pretty strong network effect, and which benefits like one big winner. But at the same time, I think that Ethereum is sufficiently distinguished from Bitcoin that, like, I couldn't make a statement now that Ethereum dies for whatever reason because I don't really see it. I don't see how it dies. So in general, I think with they are similar enough in the sense that I think time is also in favor of Ethereum to a degree. I could make a stronger statement if we had Ethereum 2.0 right now, as is. I mean, it's definitely a big source of uncertainty, and I mean, if something goes wrong, then it's most likely around that time, I would say. But in general, I mean, there's the whole idea of like interoperability that we could maybe get into, which is very interesting. But I mean, there's one trustless bridge between Bitcoin and Ethereum that's launching in a few days. I mean, it might even be launched when this podcast goes live. So that's something that I definitely keep an eye on. So there are many things on Ethereum that I like to use. But I mean, usually I use stable coins, but I would prefer using Bitcoin on Ethereum as well.
That's helpful. And Ryan, what do you think about the coexistence here? Do you think that they can both coexist, or do you believe it has to be one store of value with or without programmability on top, or one or the other?
No, so I think stores of value coexist today. Bitcoin is proving itself as a store of value. Ethereum is proving itself as a programmable store of value. Gold is a store of value. Given kind of our central bank system and fiat system, wealthy individuals use stocks and real estate as stores of value as well. So I think we'll always live in a world where like that is pluralistic in terms of the different stores of value. In the crypto space, I do think there are going to be likely two kind of major categories of store of value. The first is Bitcoin and the trade-offs that it has made. I think one of the chief attributes Bitcoin has going for it is its scarcity meme around 21 million, and also liquidity provided by all of the exchanges. But there's this second category, and it's not a smart contract network so much as it's in ETH, the asset, as a programmable store of value. So I think we'll have a non-programmable store of value, which is like Bitcoin is kind of leading the pack. And then we'll have a programmable store of value where Ethereum and ETH is clearly leading the pack. And to be honest, I don't see a lot of monetary competition to those two. There are other platforms that are trying to creep up in the smart contract space and become smart contract platforms. But there's no other platform that is trying to become a programmable store of value. So I see these two things coexisting, and actually I think they'll be very synergistic in the future.
So I guess next up, common difference is base layer scale. So people argue that Ethereum will get better scaling with ETH 2.0 with sharding. Meanwhile, Bitcoin, the scale and the throughput is just way too slow. I kind of push back to both people here because Bitcoin obviously has a viral ecosystem and Ethereum's already supporting DeFi on it. Do you guys think that the base layer can't scale on Bitcoin and this is like a serious issue? Or do you think that this really isn't a problem?
Well, I think that the base layer of blockchains doesn't scale in general. I mean, blockchains are broadcast networks. So, I mean, when you push every message to everyone in the network, it just doesn't scale, right? I mean, and sharding tries to work around that, but it's also, I mean, I see it as an unsolved research problem, and I mean, definitely it will bring, when it goes live, I think many people will be caught off guard by the trade-offs that it's making. I mean, with cross-shard communication, I mean, it will just feel very different compared to using Ethereum today, which is just a single state. So, I mean, I'm not super technical, but for me, until I see it, I'm going to remain skeptical that sharding is basically is a good layer one scaling alternative. For now, I think that just layer one scaling is just not possible with blockchains.
That's helpful. And Ryan, I mean, to Sue's point, there's a ton of open research questions involved with ETH 2.0. Obviously, you know, we track all the progress and all the teams are making progress, but it still seems like it adds a lot of uncertainty for new people to the space, especially when thinking about adding throughput to layer one. What's your take here on kind of this moving evolution here?
Well, I think we've seen a lot of progress on the research side of things. Vitalik recently made the statement that the vast majority of hard research problems on like sharding and ETH 2.0 were solved. I somewhat agree with Hasu that like, you know, we'll have to see, right? And I do think that you know, user experience around cross-shard transactions and that sort of thing isn't going to be a panacea. However, I do think there's a difference between the social contract that Bitcoin has versus Ethereum. And Bitcoin's social contract is essentially the statement that the base layer, you know, shouldn't scale. Like everything should scale on layer 2 as God intended, and you know, like God made lightning in His image, kind of thing, right? The social contract for Ethereum says that you know, proof of work and kind of the Bitcoin paradigm as originally set out might not be the best thing we can come up with. And given that this is software and that there's a massive blank canvas of possibilities, there could be alternatives in terms of scaling layer 1. And that layer 1 is important to scale for the reasons I mentioned. We need an open financial system for the world. It can't just be a settlement layer for 1,000 banks, for instance, as you know, the vision that Safadine laid out in the Bitcoin standard. You know, we need a scalable base layer. At least we need to do it, or essentially pursue all the research avenues and die trying. So, to me, in the world of software, that's a better trade-off to make because there are tons of possibilities that can be pursued, and I'm pretty optimistic about the path that ETH 2.0 is taking on that.
Well, I'm a bit more, like, I think I'm generally more pragmatic. same as probably many other Bitcoin bulls. I don't think that either of those systems necessarily has to scale. I think it's probably like a bit risky and maybe unhealthy to say that. I mean, Ethereum must scale because it just has to make the world better or something. I mean, we are still bounded by the technical limitations that are imposed to us by this technology. And my intuition is, let's try to take it as far as we can, but not further, because we shouldn't put in jeopardy what we have already reached.
I actually don't disagree with that. I think that's a pragmatic approach too. My problem is Bitcoin hasn't pushed it any farther, and isn't pushing it any farther. I actually think Hasu's right. Like ETH 1.0 is a pretty incredible accomplishment, and all that it's doing with open finance and ERC20 being a killer app and this like early DeFi movement. That's all incredibly exciting. And even if ETH 2.0, didn't work out, let's say, like ETH 1.0 is still, I think world-changing technology. My problem, I guess, with the Bitcoin take on this is like why stop? Like why not pursue all avenues? Why essentially be dependent on crypto banks to scale out your layer 2? To me, that's actually a centralization vector. So I really appreciate the path that Ethereum is taking to try these other avenues. If they don't work out, you still have ETH 1.0 and everything that's going on in that world.
Well, I mean, I push back on the narrative that Bitcoin is not trying to scale. So I think in general, when we talked about Bitcoin's vision, I think it should also be noted that Bitcoin's whole architecture is basically has only one goal. It is to resist nation-state attacks, pretty much. I mean, every design decision made by Satoshi is ultimately concerned with that goal. And anything that could put this goal in jeopardy and make Bitcoin more vulnerable is generally to the community not seen as a trade-off worth making. I think that's probably a more accurate take. But beyond that, I see quite a few ways that Bitcoin could scale. I mean, you mentioned for one, Bitcoin banks. I think Bitcoin banks are definitely the most promising way for scaling Bitcoin. I mean, they already scale Bitcoin today way beyond. There's probably 10x as many off-chain transactions today, just via largely centralized providers, as the base layer could otherwise do. And I think we can take that vision a bit further by introducing basically federated banks. I mean, Liquid is an interesting experiment in that regard. I'm actually pretty bullish on Liquid. I think the concept is very cool and it has seen more uptake than I originally expected. There are drive chains that are not yet implemented, but like the concerns about that, in my opinion, are like misguided. I think it's going to be very interesting if it ever makes it into Bitcoin. There's of course payment channels and networks of payment channels. Lightning has been progressing pretty much the way I expected, and I'm not super sold on the idea. So I definitely don't think it's like a panacea. The Lightning Network is just very, very capital intensive, and I think that there's like trade-offs that make sense between like centralization and decentralization. And in my opinion, the Lightning Network is too decentralized. So it's just more cumbersome and more expensive to use than maybe could be.
So I think I think that's a really fair take from a Bitcoin perspective. One thing I'd point out though is that Ethereum has those avenues as well. It can scale by the crypto banks. It has layer 2 payment channels, and in fact is pursuing multiple approaches. Not just kind of a lightning centric approach. But here's kind of my concern that because I actually agree with your statement that Bitcoin scales today on crypto banks, and I think Nick Carter has made that point very well. It does. It's kind of phenomenal in the way that it scales, and the banking infrastructure that's sprung up around crypto assets and Bitcoin. But
you couldn't have a site you couldn't have a bank like BitMEX.
No.
Otherwise, if it wasn't for permissionless settlement.
But here's my concern though: aren't we just replacing one set like Wells Fargo and Bank of America and J.P. Morgan for Binance, BitMEX, and Coinbase? That to me is basically we've created sound money in a gold 2.0, right? But we haven't achieved the full vision here. There's this whole why not also decentralize and turn the banking layer into protocols? That's what I mean when I feel like Bitcoin has taken the vision but not completed it, and that's where I see Ethereum completing it. Aren't you worried that the crypto banks will essentially become a centralization vector, and we'll just repeat the gold standard, and then have a bunch of banks that we're beholden to, and essentially they'll depeg from sound money at some stage, and we'll just repeat the exact same cycle unless we have this decentralized banking layer?
Well, if Bitcoin ever turns into a reserve asset and is only held by big banks, and basically no one runs full nodes anymore outside of the big banks, then I would definitely agree, because then if all the banks colluded, then you could change the rules of Bitcoin. In general, I don't see any problem with commercial banks. I mean, clearly the problem, in my opinion, is more with the Federal Reserve and the centralization of the whole, of basically the base layer of the current financial system. I mean, every US dollar trade has to be settled through the New York Fed, and the US can impose sanctions on European companies like SWIFT, or, of course, they can pressure US-based companies like MasterCard, Visa, and so on, or Facebook. But I see that if the bottom layer cannot be censored and is permissionless, then I think that the natural competition between the different banking providers can solve a lot of the problems that you are thinking about.
Well, so what I'm worried about there is basically I see central banks and commercial banks as part of the same apparatus, right? When we had sound money in the gold standard, we had commercial banks that essentially provided private banking services to the public, and they screwed up a number of times, and central banks essentially stepped in order to protect the public, some would say. But the reason they were able to do this is because central banks had so much power, commercial banks had so much power, and so central banks essentially just kind of scooped up all of that power and centralized it. I guess what I'm saying is, how many, if there was a sound money crypto asset, and there's a bunch of crypto banks who essentially controlled it. How long until central banks essentially step in again, as they did with gold, and consolidate power, and we get another fiat system? I guess I see the cycle repeating. But yeah, we can continue on other topics.
Yeah, so I guess another one that I think we're talking about is just monetary policy. So Bitcoin, obviously, huge selling point in 21 million. It's easy to understand. It's unchanging. Ethereum is a little up in the air with what it's going to be, because the Ethereum community has to incentivize stakers and make sure that security is there. But it's also not a crazy issuance year over year from what I'm looking at now. What's your guys' take on this? Do you think that the monetary policy is insanely different? Do you think that Ethereum not having one renders it not money? Ryan, what's your take there?
Yeah, first, I think Ethereum does have a monetary policy, and the monetary policy is enforced by social contract, just like Bitcoin's 21 million. And that monetary policy is lowest possible issuance to secure the network. And that's actually a good monetary policy. I think that it doesn't have a scarcity meme of 21 million, and that's probably the downside. And by scarcity meme, I just mean that it's easily understood by the public and can spread fast. And is fixed. I think those are attributes that Bitcoin has over Ethereum. But that's more meme than it is fundamentals. From a fundamentals perspective, Ethereum issuance is like something like 4.7% now, whereas Bitcoin is 4.1 ish. After the halving, that will drop on the Bitcoin side of things. But after ETH 2.0, it's also going to drop to around 1% on the Ethereum side of things. So for all practical purposes, Ethereum and Bitcoin issuance are going to be close to the same in the next, for the next 10 years or so. I do think that Bitcoin has this long tail issue to deal with, which is what do you do when you have fixed issuance and the price no longer goes up to compensate, and you're completely reliant on transaction fees to pay for security. Halvenings can also be considered like potentially halvening the security budget, at least as denominated in Bitcoin. That's something that the Ethereum community won't have to deal with because it has a algorithmically enforced issuance policy based on the number of stakers in ETH 2.0. So the Ethereum ethos is basically to evolve monetary policy in a way that minimizes issuance and maximizes security for the security spend.
Yeah, I mean, I would largely agree with that. I think that's a very reasonable way to think about it. Many people would say that that Ethereum's monetary policy has been altered manually a couple of times. Also means that it could be altered manually to in a way that basically doesn't benefit holders. For example, by increasing the level of inflation or forking in some kind of developer reward like Zcash. I don't really buy that until I see it. I think blockchain networks are generally they are somewhat permeable for positive change. I mean, that's basically how the upgrade process works in Bitcoin and Ethereum. But I mean, they are way less permeable for changes that negatively affect the holder base. So I also see Bitcoin's declining issuance as a topic of concern that I'm very actively researching. That's a topic that I spend a lot of time on. I'm somewhat positive that we can remedy it and get more information how it's going to affect the system. But I also like that there are other alternative networks like Ethereum that take, in this case, surprisingly, like a more conservative approach. Let's say we don't go for absolute scarcity in order for more certainty in the security model.
Hasu, when you're researching Bitcoin's future, block rewards running out, and the fee model, do you think that it's better that Ethereum chose to never have to face this issue because they'll always have block rewards and fees? Or do you think that that's probably the wrong way to think about it?
No, I mean, I think it's definitely possible to think like that. I mean, if Bitcoin proves that it's possible to run the system on fees, then definitely other networks can just follow suit, right? I mean, what prevents Ethereum from then adopting the same changes?
That's a good call. And Ryan, what's your pushback to, like, Bitcoin's just so easy to understand with people because people say, hey, there will only ever be 21 million. Meanwhile, Ethereum's making, changes as it grows in the wild. What's your pushback there? Like, do you think that it needs to be done because we're not really sure how ETH 2.0 will play out yet? Or do you think that we'll always kind of face this friction point with trying to convince people about Ethereum?
So I think his take is very reasonable. like on that regarding like the trade-offs between Ethereum and Bitcoin there. I do think that this scarcity mean advantage of 21 million that Bitcoin has right now isn't necessarily a long-term moat and a long-term hedge. People, the general public, barely understands crypto assets now, like barely, as evidenced by like Tron's market cap, XRP's market cap, like the list goes on. And it barely understands issuance and monetary policy and how these networks are governed. But knowledge is going to increase in time as the asset class grows, and I expect it will become obvious over time that Ethereum has a very reasonable low issuance monetary policy that is almost as immutable as Bitcoin, and for all intents and purposes, like immutable enough so that there's not a massive difference between the two. So I guess right now, the scarcity meme is hot, 21 million is hot. But, let's check back in 10 years as markets start to fundamentally understand these assets and see if that remains true. My guess is that Ethereum's monetary policy will hold up far better as it's more widely understood.
That makes sense. And switching gears a little bit to, I guess, a similarity or a difference, I feel like the crypto Twitter realms of Bitcoin and Ethereum are just, the maximalists on both sides are just extremely toxic and, quite frankly, annoying. What's your guys' take on this? Because this is a real normal conversation about coexistence and similarities and differences, but I feel like Twitter and crypto Twitter is just becoming useless to follow like maximalists on either side.
I wouldn't say like super annoying. I mean, I generally don't try not to follow people who like have very, very strong opinions and are not interested in like rational discourse. But I mean, I can. Like I wrote an article like last year saying that where I compared Bitcoin to religion, and I generally see all the best crypto networks like that. And that's actually something that I really like about Ethereum as well, that they both have very strong social contracts, and if you have that, then people just feel part of like a religious movement or like a tribe, and I mean. But it's the people in two tribes that are just very different than what I think it's just what you expect to see, that you have this kind of fighting and constantly like the self-enforcement of different party lines and so on. So yeah, I try just not to engage with that very much. I mean, I've had my fair share of criticism from some Bitcoiners as well. But it's generally not something that I'm concerned with.
That's fair. And Ryan, what's your take?
Yeah, so I will say some of Hasu's articles around this have like been some of my favorite that have actually been written on the topic. So I really appreciate his perspective on like these systems as religions and how there's this embedded social contract. I think the maximalism is largely noise. So for instance, Bitcoin maximalists will say things like, Bitcoin is money, ETH is shit, like ETH can never be money, right? And like, that's obviously not true. I mean, that's what the Nouriel Rubinis of the world say about Bitcoin. I think both of these systems can accrue monetary premiums and already have monetary premiums today. So that's obviously not true. But let me actually make the case for maximalism for a second, because I do actually think that extremist views can be somewhat useful in the evolution of these networks. Quite frankly, it takes some like crazy people in the early days to say things like Bitcoin is money and Bitcoin is the next gold for it to actually become those things. In the same way, it takes crazy individuals that are completely outside of consensus to say ETH is not just fuel, ETH is money, ETH will accrue a monetary premium to the future. And if it's said enough, and if enough people believe it, it sort of moves the Overton window of like what's possible to say about the asset a slight bit. And that starts to invade the mainstream narrative too. So as much as like the vitriol on Twitter kind of annoys me and as like unproductive as it can seem, there's actually a need for some level of maximalism in these communities, particularly maximalism around like the core values of what these networks stand for.
Yeah, I mean, I totally agree with that. And I mean, it's definitely what you said. But also, like, in times of crisis, when, for example, basically the Bitcoin network was, what some would say, attacked or like threatened by like an internal takeover from some parties. I mean, that's when you're really happy, right? That there are radical people in your ecosystem that fight for the same values at the end of the day, that are willing to take basically more action than just let's engage in a friendly debate. So I mean, at the end of the day, like, the maximalism, I don't think we should ask if it's objective. I think we should ask if it's useful, and I think the answer is pretty clearly yes.
Yeah, and one thing that I think actually the Ethereum community could use a bit more of is not quite a maximalism. I wouldn't call it that, but some strong opinions on ETH as an asset and its ability to become a money, ETH's ability to become a monetary premium. I know I've been somewhat outspoken about this, but I really believe unless ETH does accrue and continue to accrue a monetary premium, like the entire security of the network is at stake, and it won't become an open financial platform for the world. It's pretty dependent on that, and I'm not sure that everyone in the Ethereum community believes that. So I'm somewhat of a not ETH is the only money maximalist, but I'm somewhat of an ETH is money maximalist because I do believe in that it's essential for the network to accrue that, or it might not exist eventually.
I mean, the moment basically that there were people on crypto Twitter, like a rising amount of people who say that Ethereum is money, and I mean the whole emergence of the DeFi stack, and basically ETH's recognition as when the monetary premium is important, and let's focus on like paving the way to make ETH good money. Pretty much that's what made me buy back into Ethereum in the first place, because I mean, I have a very strong view that blockchain is useful for money and not much beyond that. So when basically I got the impression that the ETH community is focusing more on whether the market sees ETH more as money, then that made me very optimistic. But at the same time, I think it's very interesting. And I know some Ethereum OGs, some of which hold a lot of Ethereum, who still to this day have the strong opposite view that ETH should not be money and ETH is not supposed to be money. Right? They see Ethereum more, the Ethereum token more as like a share in a sort of decentralized AWS, right? Via proof of stake. Like it's a share of basically this network that guarantees them a share of the transactions, pretty much. They see it like equity.
That's very helpful. And we would be remiss if we didn't talk about liquidity here. Bitcoin's obviously the dominant trading pair for every crypto asset on basically every exchange. And some people would argue that liquidity is one of the most important features of a crypto asset. What's your guys' take on liquidity differences between Bitcoin and Ethereum?
Well, I think that the liquidity difference is pretty big still. I would agree that liquidity is probably the number one feature for a money, and what I would probably judge it by. So I use Bitcoin a fair bit for basically. I was a professional poker player, and I used to make a lot of transfers internationally with other players and so on. And Bitcoin is the is the dominant trading pair in pretty much the whole OTC market for this space. I've never seen any transfers or like even any quotes with Ethereum. So it's usually Bitcoin and Tether, and I think that same trend. I mean, that can be seen in other markets as well. So I mean, I think Ethereum is the third most liquid currency, but Bitcoin still has some advantage there.
Gotcha. And Ryan, question for you, and I guess Hasu as well, before we close out. It seems like Ethereum has obviously the developer mindshare in the room, and there's thousands of experiments and projects going on, which is obviously amazing for a developer community. But Bitcoin obviously doesn't have the pitfalls of this, which is when we come up with potentially a bad idea, like say ICOs where billions are raised and not that many projects came through. But on the flip side, this opens the door to cool ideas like DeFi and Web3. What's your take on the development communities between Ethereum and Bitcoin? I guess the real question is, does Bitcoin even need a development community on top, or is Ethereum just too strong here? What's your guys' take here? And I guess, Ryan, we could start with you just to give some color.
Yeah, I certainly think, and I expect Hasu would agree with me that like Ethereum's developer community is far larger than Bitcoin's developer community, and I think that's just the nature of the platform. Ethereum is a programmable money platform. It's Turing complete. There's lots of things you can do on it. It always kills me when people say Ethereum's never had killer apps, and I'm just like, what is ERC20? I mean, it has billions in stablecoin value. It gave rise to a completely new permissionless fundraising movement where billions were raised. Yes, lots on crappy projects, but the primitive itself is incredibly powerful. So it has attracted more developers. I expect that to continue in the future. But let me say that like one of the things that I think the Ethereum community needs to continue to attract that might be more important or might be a subtype of developers is actually developers who are building money protocols, developers who are building banks. I'm kind of like bearish on the idea of general purpose decentralized applications. I'm very bullish on money use cases, in particular programmable money use cases. So it's not just about accruing the most developers, it's accruing the most developers who want to build money protocols on the platform, in particular banks. And I think Ethereum is far ahead of any other competitor with respect to those money type use cases.
It's helpful. Hasu, what's your take on the developer ecosystem for Bitcoin? Because to be dead honest with you, I feel like a lot of Bitcoiners share a lot of ideas like Schnorr and Taproot, but I feel like these ideas are just not fading away, but there's just not a lot of development activity there outside of a couple of people. What's your take on the developer community for Bitcoin?
Do you mean not a lot of developer activity for Schnorr and Taproot, or for stuff beyond that?
I guess everything, just the whole ecosystem overall.
Well, I mean, like the only thing, like from my experience from talking to people who are like close to Bitcoin development, there's no need for more core developers, more protocol developers. I think, I mean, you could argue that more people actually would slow down the process. So what's always needed is more peer review for sure, more documentation. But beyond that, I think we are absolutely fine. I mean, for sure, Ethereum has a bigger development community, but I think it's very hard. Also, for me, it's very hard to judge like the depth of that community. I mean, obviously, it's very broad, but I mean, when you have a programming language that's effectively JavaScript, then I mean, of course, you're going to attract more developers. But at the same time, it took Ethereum like an extremely long time to come up with a trustworthy multi-signature protocol. I think Gnosis is still the only one, right? And it's still in beta, or maybe alpha even. I'm not entirely sure. So I mean, that's just not a good look, in my opinion. That like the quote unquote not very expressive Bitcoin has like a multi-signature that I think 30% of all coins in Bitcoin are in a multi-signature contract right now. And Ethereum still doesn't have that. I mean, I wish like there was more focus on the stuff that is proven to have very high demand.
Yeah, no, I definitely agree with you there. I do think it's hard to figure out what the demand is when we're creating hopefully new things that are so different from what we have today.
Yeah.
If that's helpful. So guys, 2 last questions for you. First one's going to be quick. The second one's a little bit longer where you guys make each other's case. But the first one, start with Ryan, then Hasu. Ryan, what's the one thing that could kill Ethereum tomorrow? And Hasu, I'll float the question to you as well for Bitcoin after Ryan's done.
So I actually don't think that Ethereum could be killed completely. I think maybe it could be severely wounded. And I think a wound might take the form of a major protocol hack, for example. Another type of wound that would affect probably both would be, a major government ban and the choking of liquidity on centralized exchanges. Those are probably the 2 things that could potentially mortally wound Ethereum. However, at this stage in its growth, I actually think it's a fairly unstoppable platform, as is Bitcoin.
Hasu, what's your take on what could kill Bitcoin?
Well, I mean, nothing could kill either of those protocols tomorrow. I think the important recognition is that like anything that could kill them, it would take a while, because I think probably the most like let's talk about the scenario of like a very crucial software bug, for example. So the one reason why I wrote the article about Bitcoin social contract is because I still think this dichotomy between Bitcoins, or same can be said for Ethereum, but the technical protocol and the social contract where people agree about the rules and who owns what, that's still somewhat misunderstood. Because like I cannot imagine like any bug that would kill Bitcoin, because we could just reboot the system like without the bug. Right? I mean, maybe there would be damage, but anything that can be basically, as long as the social layer is strong, then the technical layer can just be like restarted, different parameters. So the way of breaking Bitcoin or Ethereum would be to break the social layer, for sure. I mean, and the strongest social attack that I could imagine right now would be criminalize ownership of Bitcoin. Like if there was a widespread ban, like several nation states coordinating, definitely the United States, the EU, and maybe Japan. I mean, that would be enough for like to definitely stop Bitcoin's current trajectory. It would just find a new equilibrium, in my opinion, at a smaller scale, and still be useful for anyone who's willing to take like something of a personal risk in using it, right? I mean, for some people, it's like most of us like break the law all the time, but just in very small things that are not very, where you're not very likely to get caught, or where the punishment is not very severe, right? So, of course, there are all kinds of obscure laws as well, but like the social contract in society is that let's just ignore that those laws maybe exist. So, but if nation states can criminalize ownership of Bitcoin and make it so that people will actually follow these rules, then I mean that's the way we definitely hurt Bitcoin a lot.
That's great, caller. And guys, to close out, let's give each of you a chance to make the bull case for the other asset. Hasu, let's start with you this time. What would be your bull case for Ether?
Well, first, I think that Ethereum 2.0 should launch. I mean, that would be pretty good. I mean, or at least a clear cut. Well, maybe if it never launches, then that there's like a recommitment at Ethereum 1. Because I think the worst that can happen is, well, as I said, I mean, if the social contract suffers and gets weaker over time, that's how these projects die, right? They don't die abruptly; they fade out. And if the Ethereum community was to wait just forever for Ethereum 2.0 to launch because it's getting delayed and delayed and delayed, that would be quite bad. So I think the bull case is definitely Ethereum 2.0 launches somewhat on time, and it has advantages over the current system in terms of scalability. Also, I think one underestimated bull case for Ethereum is that proof of stake becomes regarded as somewhat of a green alternative to proof of work. I mean, personally, I totally disagree with that view, but that proof of basically that proof of work is bad for the environment. But I think that narrative could be very strong in the future. Also, proof of stake should be not less secure than proof of work. That would be very important. And in general, it would be very good for Ethereum. Blockchain turns out to be useful for more than just money. I mean, so far we think that mostly, well, the monetary use case is the focal point. But if on Ethereum there could be ways, as Ryan said, to create trustless banks that have like a lot of functionality that centralized commercial banks could have, that would definitely change my view on Ethereum a lot. Especially if those same things are maybe not possible on Bitcoin. And well, maybe to Ryan a lot, I mean, just if it can just stay afloat and, keep the community strong and just don't die, then I think Ethereum is in a pretty good position.
So helpful. And Ryan, what would be your bull case?
Yeah, bull case for Bitcoin. So I got in this space because of Bitcoin. I think I'm attracted to Ethereum because it's like Bitcoin, and I think Vitalik said that Ethereum is like moderate Bitcoin values in terms of the value system. So I appreciate both systems. I think the bull case for Bitcoin is that like this whole programmable money protocols thing doesn't really take off. Could be for a number of reasons. Maybe the tech isn't there. Maybe like hacks prohibit it. Maybe it just can't compete with the liquidity of more centralized crypto banks. I think another bull case for Bitcoin is just around this digital scarcity meme. It's pretty powerful, especially in these early days where mainstream does not understand issuance policy and monetary policy of crypto assets. It's possible that this meme takes hold in a big way, and other crypto assets like Ethereum just doesn't have a chance to catch up, and it sort of establishes itself as a liquidity player. I tend to think we're more in like the first or second inning of this whole thing of like like 8, but it could be that Bitcoin establishes a material advantage around this scarcity meme. It also could be that like Bitcoin was originally correct, that like the trade-offs in terms of base layer are somewhat permanent, that there aren't really other solutions, that there's no real way to scale like layer 1, in which case all of the effort in the Ethereum was wasted, right? That's still a possibility. I think that possibility remains until we see scalable blockchains like ETH 2.0. So like it could be, I guess in summary, that in this whole crypto thing, the big use case, and maybe the only use case, or the vast majority of the value, is just store value and not programmable store value. So that's a possibility, and that might make somebody more bullish for Bitcoin if you believe those things.
That's helpful. Guys, I really appreciate both of your time and having a real, professional conversation about the similarities between the two. I think it's refreshing given basically the unhelpful conversations that happen too often on Twitter.
Can I just congratulate Hasu in advance on his potentially legendary trade of shorting ETH in last year and then longing it this year? I think that's going to be an incredible trade. We're going to look back on that 5 years from now and just be in awe.
Well, let's hope so.
Yeah, congrats on that. And guys, where can people, Hasu, where can people follow you on Twitter? And then after, Ryan, share yours as well.
I'm at HasuFL on Twitter, and visit uncommoncore.co. That's our blog that I run with my colleague Zoo.
Excellent. Ryan, what about yourself?
So you can find me on Twitter at Ryan S. Adams, where I'm generally tweeting ETH is money and trolling maximalists. And you can also find Mythos Capital at mythos.capital and our staking service at mythos.services.
Excellent. Guys, thanks so much for coming on.
Thank you so much.
Thanks, Tom. It was a pleasure.
Hey, everyone. If you enjoyed listening to the episode, please share it on Twitter and LinkedIn and give us a 5-star rating in the iTunes store.